Awesome. So let's just get started with the day. It's Sunday, December 17. This is our psychology webinar that we host every Sunday, where we talk about different topics that could improve um, your life, all in all. I'm not even gonna talk about it as oh, it improves your trading. It's more of this is how as a trader you come in and you improve your life. So today's topic of conversation is how to be a full-time trader. What does it take? What are the, tasks that need to be completed, and in what aspect you have to think about things in order to achieve what you need to achieve in the industry and in your career. So I just want to jump right into it. Um, it's, very interesting to be a trader, and it's a different psychology all in all. And a lot of people come into this game and they think that, oh, because I'm a trader, I'm gonna make a lot of money, and that's just how it goes. But that's not really the reality of the matter. In order to be a full-time trader, to start off with, you can't think of it in that aspect. You have to think about it in a sense that this is my career, this is my business, and in order for me to be full-time in a game where 99.9% of people fail, I need to view this thing as if I'm running a business. So all of us that are traders that want to excel in this industry, we are the 0.01% that come in, that think of it as a business, that do the right tasks, that stay disciplined through the entire process, and understand that we're playing the long-term game. This is not a short-term sprint. This isn't something where you come in, you make money real quick, and then that's it, you're done. This is something that through consistency, through high probability analytics, you're capable of generating income on a consistent basis, month in, month out. You should never view your career in a daily aspect, which means that you can never risk too much on one particular day or even one particular setup. It's very common for people to come into this game and to basically blow an account the first day that they're in it, or blow an account on the daily basis, or at times even blow three, four accounts in the same session. I've seen people blow accounts in, an hour, 2 hours. I've seen them blow multiple accounts in a few hours. So it's very easy to lose money in this game. It's a lot easier to lose money in this game than it is to make money. So if you are a full-time trader, good job. You beat the statistic, you beat majority of the industry, you beat majority of people who call themselves traders. Now, I want to jump into what it takes and the steps that you need to take in order to ensure that you can go full-time into trading. We have some people in the team that are coming from different backgrounds, that have come from different industries, and they're trying to transition now from being a part-time trader into a full-time trader. So we're going to jump into the specifics of what it takes in order to get there, from where you are to where you're going to be. So I'm going to use the text box over here. So steps to take in order to go full time. And we're just gonna be doing like a list down here. So let's make this font size smaller so we could all see it. Okay, awesome. So first things first, I mean, you come in on the weekly basis and you're analyzing charts and marking out times and days where there is high impact news drivers. Another thing that you want to do is every day before you come into the day, you sort of want to have a general bias as to where the market is going to be going. So a major part of the steps that you need to take is preparing for the day that you're trading. That's a big part of it, is understanding what day you're trading. What are the current market conditions? What are the different things that we know about the market? Or maybe you don't know. Maybe there's something that you can't put your finger on. So does that mean that I have to come in and trade it? Well, in the working class world, that means that you have to come in and make money every single day. That's not what it takes as a full-time trader. As a full-time trader, it's understanding that we have to anticipate what the market is going to do, come in, find opportunity to be able to do that, and then execute upon it and capitalize on it. Which brings me to the next point. Choosing an asset. Understanding what asset I'm trading. Understanding that, hey, this asset that I'm trading, I'm going to master this one asset. This is going to be my asset. I'm not going to trade anything else but this. Yeah, we know how to trade. Yeah, we know how to analyze charts. We can come in and throw margin on something else. But think of that other trade as side income. That's the side account. That's the one that, you saw an opportunity elsewhere, but that's not your asset. That's not the asset that runs the business, that makes the business money. That's the asset that, hey, in a outside perspective, we're a business, and there was this other business opportunity that we came across on the side. So we decided to pull the trigger on it, and hey, it's making us some side income. So throwing a small position on a different asset to be able to capitalize on it, that's fine. But you need to be a master of one particular asset. Now, you guys know my asset is NASDAQ. And I've chosen NASDAQ for a variety of reasons. One of them is volatility. Another one is what the asset actually is. It's the top 100 tech companies of the US. And I'm a strong believer in these companies because these companies are the companies that run the world. So I chose my asset based off of what that asset was, how it trades, and also the precision of price action that my asset has. Assets like foreign exchange, they're not very precise. They can be at times, but they tend to be a lot more manipulated. And their price movement on the daily basis, their daily ranges are not the same as something like NASDAQ, as S&P, as Dow Jones. In the early stages of my career, I found a lot of people in the FX game transitioning into trading gold because gold moves a lot more than the rest of the pairs. So why were people trading gold? So that they could capitalize on more movement. Now, if gold was like a dog, then NASDAQ is like a cheetah. Typically, if you tell somebody that I'm a NASDAQ trader and they're a gold trader themselves, their eyes pop out of their head. Why? Because NASDAQ moves a lot more. It's a lot quicker. Even NASDAQ in relative to S&P. S&P is very slow in movement compared to NASDAQ. NASDAQ might move 100 handles while S&P only moved 10, 15, 20, let's give it. But you understand what the asset is that you're trading. How are you trading it? Choosing a time. That's the next one. Choosing a time to trade your asset. Understanding what is the best time for me to trade the asset of my choice. Somebody might be a pound yen trader. Does that mean that he comes in a US session and trades pound yen? No. Pound yen's hours aren't in the US session. Pound yen's hours are in the Asian to London overlap, which is London Open. So London Open all the way up until New York Open is pound yen's hours. So as a NASDAQ trader, I know my hours are from US market open to US market close. Why? Why those hours? Well, NASDAQ is a part of the equities market. And the equities market is not open anytime other than the US session. Yeah, we trade futures, it's traded 24/5. We get that part. 23/5. We get that part. But the hours that I come in, am I capable of finding the right opportunity with high probability backing up my bias? The discipline that you need to have to understand that. That off hours, if I wanted to trade a setup, it would be a lot harder or less probable in my favor. If I'm executing a London trade, it's a lot less probable, so maybe I want to use less risk. As in, if I'm using 10 contracts on the session, then maybe I want to trade maximum of 3 contracts off the session. And you can't take more than one trade. You got to choose your spot, you got to get in, and that's it. You get one trade in London session. Because if you take 3 hits in London session and you show up to US session in a loss, your entire psychology has shifted. You might not even have an account at that point if you didn't risk properly. If you came in with your 10 contracts. Or maybe you hit the drawdown limit on the account for the day. So understanding that just because charts are open doesn't mean that I have to be there all the time. Understanding that, hey, if charts are traded 23/5, but out of the 23 hours in the day, only 6 of them are high probability, and within those 6 hours, there are certain times that the chart should be moving. So maybe I'm somebody that's targeting $1,000 a day. Well, if I'm targeting $1,000 a day, then that means that I came in and I worked 6 hours and I made $1,000. Well, that's $1,000 divided by 6 hours. How much is your hourly rate? Versus somebody else that comes in that understands that there's a time within that 6-hour window where the probability of the trade working in their favor is higher, and he only sits there for 30, 45, 1 hour, and he makes his $1,000. That's a lot more powerful. Because you made $1,000 in an hour. You made $1,000 in 2 hours, so your hourly rate just jumped. It jumped to $500 an hour or $1,000 an hour, which leaves you a lot of time on the daily basis to do other things. A lot of people, they come into this game and they come into this game to be free, to have freedom. To have freedom from the world, to have freedom from their life, to have freedom from the system, to create more free time. That's why they come into this game. Yeah, the money is attractive, don't get me wrong. But at the end of the day, everybody comes into this game for freedom. They come into this game to make money on the side. But what happens when that money becomes so much on the side that it's supplementing the entire income of your 40 hours a week job? That's when things change. That's when your mentality shifts. And you understand that, hey, you could potentially make double that because this industry is unlimited. Nobody decides how much you make other than yourself. When you're clicking that contract size on the side, you can always switch it up. You feel more confident on a setup, maybe you want to risk a little bit more. But we're going to jump into that in a little bit here. At the end of the day, it comes back to closing off all of these points that I just mentioned. But it's the anticipation, the execution, and the result. You have a target in mind, and you're content when you fulfill the target. That's it. That's it. That's all you need to know. That's all you need to do. It's a lot more simple when we talk about it here, obviously. But it's not supposed to be complicated. It's supposed to be something so simple that, hey, this is what it is. Maybe the day you're playing is just not the day to trade. That doesn't mean you sit there and continue clicking the button. If you don't see something, if you can't anticipate something, or maybe you had the anticipation and the anticipation was wrong, it's limiting that process, limiting the ability to lose in this game, calling it quits early. We love days where the market doesn't provide, because I get to sleep, because I get to relax, I get to come in and play a new day, I get to wait patiently for the next setup. It could be tough. There's a lot of people that are very impatient people. But that's the important thing. In this game, you gotta have a lot of patience. As I said, it's not an overnight thing. It's something that takes months, even years for some people to achieve. But the simpler you make it on yourself, the better off you'll be. So I want to jump into a real life example using a little bit of market replay from Friday's price action, which is this chart that we have up in front of us, and how somebody can, come in and take a trade, take a loss, and then wait either to not trade anymore or to see the next opportunity and to anticipate it and to execute upon it. Okay, so that's what we're going to go through right now. We're going to jump into price action. We're going to see, okay, what did the market do? How did it play? And what we could have capitalized on. And how playing days like Friday, you're able to move forward as a full-time guy. Okay, so let's get into it. We always pay attention to market open price, right? So this is 630 right here. This candle. That's 630. This small bull candle right there. Let me just put this here for now. Let's zoom in on this area so we can see it better. So we're going to do our analysis based off of, we haven't seen price. So this is where we are. Okay. We know that there's these highs right here. So we have equal highs up top. Right now it's 5 a.m., an hour and 30 minutes before my market session. And we're gonna pretty much play out price. And we're gonna understand how we could have potentially capitalized on it. So we have those highs right there, and we have these highs over here from yesterday's price action and market open. So you have two buy-side liquidity pools in order for us to target. This has already driven down into this inefficiency, and this has driven down into this OB right here. Use that 50% of the OB to react. So we have buy-side up here, and we're just gonna wait to see what happens up until market open. So let's play it out. Still equal highs left behind. It's currently 535. We still have equal highs left behind, and it's currently 625. Okay, so the next 5-minute candle is where price opens. So this candle drove down. We do have equal lows. However, this sweep up could have potentially been a liquidity pool. So we have these equal highs over here. We have more buy side up here. And we have another one right here. Why am I so strong on the long side? Well, it's been a long market, and we left these equal highs up here. That's way too smooth. So I would like to see price accelerate to that level. Now on a higher time frame, looking at this thing, retail is seeing short, potential bear flag to drop down on the next leg. That's what retail is looking for. So I would want to see some sort of climb up into this area. See how that works? So it pushes up. Now we can drop down to the 1 minute and see what's going on. So we had this gap left behind in price. And price has reacted here. So in reality, if I were to take this trade, I have to put my stop loss down here. But my stop loss amount on this is fairly big. It's 24 handles. So maybe I want to take this with 2. So I'll buy it. But I gotta put the stop below this. And we'll see if we can reach up into this area and potentially over here. So notice how we're holding this. If I saw this and I saw this drop down and I saw this holding over here, that means if we don't break here, then we're good to go. So maybe I want to add 2 more. I'll move my stop below this candle right here, because this candle has tapped into there and I wouldn't want to see it past this candle at that stage. Oh, we gotta stop that. So we're down $56 on the day. Now, I'm gonna carry on. So I was wrong, right? I was wrong. It took me out. Does that mean I come in and I take it again? I just got taken out. Even though this candle that took me out, the way it closed could potentially be the last spot. Does that mean I just got knocked out? Should I take it again? No. You don't take it again at that point. You wait. You wait, see how price plays out, and price is playing out very nicely. Okay, so I see this candle, and this candle drove down into this inefficiency left behind in price. Let's mark that out. Right there. And currently it's 717. So we know the algorithmic time to trade is around 750-ish. So maybe I just want to wait a little bit more. Okay, so we tap back into that inefficiency and we couldn't break through. Now I've been out for 712 to I've been out for 9 minutes. I'm down $55 on the day. And let's say I'm somebody that at my job, I've been making $250 a day. So maybe I want to take another trade. And because I know that if we've broken out, we still have room to get up here to the equal highs left behind from yesterday. Let's measure this range out. We have another 33 handles left in there. So what's my stop loss? 11 handles. So it's a 1 to 3 trade. So if I risk $100, then I could potentially recover my loss and make a little bit on top. So I'm somebody that's making $250 a day at my job. Then I know that I need to make $250 of supplemental income in trading in order to be able to quit my job and to do this full time. So I buy it here. I take the stop loss. I place it down here. Let's buy a little bit more to make it a flat 100. I'm going to put the take profit up here, right above that line. If it gets there, it gets close, I might kick out a few of them. So let's play price. Got kicked out. We're up $213 on the day. We're $40 shy. We're $40 shy of supplementing our income. And at this stage, price has made it to its target. We know that on the 15-minute time frame, we still have these highs to take out. So maybe at this stage, I want to come in. I want to mark this out like so. And this one will do a different color because it's the highest point. Market is at a very high point. It's almost at all-time highs, if not at all-time highs. Different markets, different conditions, different brokers will show different results. So we know that these are the conditions that we're playing in for the day. Now, we have this candle sweep above the ultimate high of the week, which was Thursday, London session highs. Now is a very important area. If I can see price has swept the liquidity all the way off the highs, if this thing can reverse, then potentially this thing can drop down back to market open range. So how can I anticipate if it's going to break structure? Well, when I go down to the 5-minute time frame, I wait. Okay. So here's what happens. I can see that there's a gap left behind in price from here to here between this candle's low and this candle's high. We've broken structure. So now if I can get something that drives up into this area, it would confirm if we could get some sort of 1-minute structure there that this thing is going to drop off for me to enter to chase liquidity off of these lows, off of this candle's wick, or even the 50% of this candle. So maybe I want to have things like that marked out. I want to have this marked out. and I also want to have this marked out. So now we go to the 1 minute. We go to the 1 minute, this is what it looks like. So we're going to play this price out a little bit. We have equal lows. We also have equal lows over here. Still equal lows left behind. So we've tapped into the area that we've had marked out. So now these candles are weak bullish closes. If this was going to be a strong bullish close, this candle needed to push and close above this area. So if I play this out for another minute, this is typically where I would come in and I would short it. So when this candle's low breaks after tapping into the level that we needed to see, let's look at the 5 minute right here. The 5 minute has tapped into this inefficiency and we've held about the 50% of that range. So I'm up $213 on my day. Maybe I just want to risk $50 off of it to potentially see if I could reach my $250 target. So if I take this over here, my take profits would be here and would be here. So this from here down to here is a 55 handle range. So 55 handle range with a 10 handle stop. That's a 1 to 5. It's a good risk to reward. It's a proper setup. I anticipated it. I marked it out. I saw the flip of structure. So I want to take this trade over here. I think that it has a good probability of working out in my favor. And the timing of the market, 9 a.m., lunch hour retracement, we know we'll target a liquidity pool, which was right here, this liquidity pool. And then 9:30, potential reversal to go in the opposite direction. So I'm going to short this here. I'm going to take the stop loss. I'm going to put it above $22 stop loss. I'll risk $50 off of it. So I'm going to sell another two, $44. That's all we're going to put on. $44 of risk of the $213 that I've made. So we'll play out this price. So now we've swept this. I want to roll my stop loss to break even. We're going to take a look at this on the 5 minute. 5 minute looks like this. It's officially flipped the entire structure. Maybe I want to kick one out over here. So I'm going to kick one out. I'm at $237. And I'm going to play out price to see how it accelerates to the next level. So we went through this with ease. We're currently up $150. So if I close one out of the 150, it's going to lock in an extra 30 and 50 for me. I'll make it to my target. So I'll lock in another one right there. Now I've made it to my target. I've supplemented my income. I know that we have this level to target still. It's fairly close to it. And we also have the market open, which is right here. This is the low of market open. So looking at how price is accelerating down, maybe I want to mark out market open. And I want to wait to see how they're going to trade it into this line and this line. That's the next candle. The next one. Following. So now I've made it to the next one, but price closed right there. Maybe I want to give it one more candle. Okay, it's accelerating through. Maybe I want to drop my stop loss down to the right here. So I'll lock in that profit regardless of anything that happens. And I want to see if we can accelerate to take out market open, but we'll just set the take profit at market open and see what happens. So my target was $250. I supplemented my income. I got the $250. I set the stop loss into profit, so I was risk off on all the positions that I took. It was in profit, so even if it came back, I would make a little bit of profit on it. But at the end of the day, as long as it went to the take profit that I had in mind, that I anticipated, that I executed upon, that I took the right risk to reward setup, I would end the day where I wanted to end the day. Even potentially with more profit than what I had anticipated. So that's almost 2 days worth of what I would need. That's it. There's no more to it. You find the best spot. You anticipate the move. You analyze the chart. Everything we talked about, right? Steps to take. Analyze charts, marking out times and days where high impact news drivers. Preparing for the day that you're trading. Understanding that we have buy side. That market is in a bull market. Choosing an asset. I know NASDAQ is my asset. Choosing a time to trade your asset, US session. The anticipation, the execution, and the result. We hit our target and we're content. That's it. That's how simple it is. So, I hope you found today's meeting insightful. We'll be posting this probably on YouTube. So anyone that's listening on YouTube, please feel free to go to our website, thefoxandthemaniac.com. Over there you can get access to our Discord and our live trading room where we talk about all these different things.